miss you, Aubrey, if you don't stay away. It's time to go digging for value. Hey, I'm Allison Southwick, and I am joined as always by Taylor Muckerman and Joel South, energy analysts here at the Motley Fool. We're going to hit the headlines, and then we're going to answer your questions when we go to the mailbag. So, first up.
Top story, lead
Top
story.
Big
Big dog,
look
Wildcat.
who's back.
Yeah,
It's
check him
Chesapeake's
out.
ousted founder and ex-CEO. He's not done with the company yet, because a firm run by McClendon is trying to force Chesapeake to drill 12 multi-million-dollar wells. Meanwhile, the company has been trying to rein in spending and cut debt. So how is McClendon able to twist the company's arm?
Because he had a unique setup along with Tom Ward with the company where they could invest in the wells that Chesapeake was drilling. He had to pay the same percentage in the liabilities and expenses, but he still has about 2.5% to 3% stake in the majority of the wells that Chesapeake owns and new wells that they drill until June or July of this year. So then he's got the legacy once they're already drilled at the production assets there. So that's why he's able to come in, because he's a stakeholder in these wells, and he's actually trying to get the state of Louisiana on board, because he's trying to say, you know, so much more revenue is going to be brought in if they drill for natural gas here, and then he's trying to get the landholders, because they want their mineral rights and the royalties, because right now they're just getting lease payments from Chesapeake rather than the money that they originally signed up for.
So how much could this really derail the company? I mean, they're trying to cut back on spending. Meanwhile, he wants them to open their wallets.
I don't really think it's going to derail the company too much, but just the fact that the guy that did almost derail the company still has some pull here and is now trying to get state governments on board is a little bit worrisome from investors. You haven't really heard of him attached to Chesapeake since he left, but now that investors know he could be around for the next 20 to 30 years, depending on how long all these wells last. It might not last that long, but it could, so that has to be a little worrisome for you. And right now, he's trying to get them to drill for natural gas, dry natural gas, which hasn't been very profitable. Even though prices have spiked recently, it might just be some bullishness on his side. Either that, or maybe he's thinking about drilling some more wells for his newly founded company down there, trying to test the waters a little bit. And you talk about a company like EOG that says it doesn't want to drill for dry natural gas for the next 3 or 4 years because it says oversupply. So I think Chesapeake's kind of validated in being worried about this, but we'll see if they're able to skirt the issue.
Yeah. All right. Well, let's head over to National Journal, where Energy Secretary Ernest Moniz is pushing back against environmentalists who were talking trash about the White House's
smack talking
energy
smack talk.
White House. It's the worst kind of smack
It is
talk.
the worst.
It's the best.
The best for us, anyway. Apparently, as we talked about, I think a couple weeks ago, environmentalists do not like the White House's all of the above strategy. Speaking at the conference, he said, there is not going to be one low-carbon solution. There are going to be multiple low-carbon solutions. We need all the arrows in the quiver. My first question is the most important. Why have we never talked about this guy's hair?
Tremendous body.
It's amazing.
He's got a tremendous body.
It's all there. It's so
If
well
this was
cropped.
1965 and you were on a California beach,
Yep.
I think he'd be the most famous guy there.
Absolutely. It's just got this gorgeous
Blast from the
wave to
past.
it. All right,
Shiny.
enough about his hair.
Well put together nuclear scientist.
Very well.
Enough about the hair then.
MIT
We'll move
man.
on.
Classic MIT man.
Classic.
Yeah? Okay. What do you think of the all of the above strategy? As much as I would like to talk about his hair all day, let's get to the topic at hand. All of the above strategy. What do you think about it?
Well, I think the all of the above strategy obviously is going to work. You're seeing a lot of environmentalists pull back because he's talking about a lot of drilling in natural gas and having natural gas be that bridge fuel for the next 20 to 30 years. But if you think about it, that's the only way to go. We don't have the technology right now to move all towards renewable energy. About 5% of our electric generation right now is produced through renewables, and that's not always on. So realistically, it's closer to 2.5%. And if you think about it, if you're ever going to get into a green environment and zero carbon emissions, you need natural gas to be that bridge fuel. The reason that is, you need to cut out coal, the highest carbon intensive energy source. And if you look at the cost of building new natural gas facilities, they're extremely cheap. So when you're making that decision 15, 20 years down the line, when technology actually does come around, it's a lot easier to move away from natural gas because you don't have so much capital already put into a lot of the facilities like you would with coal. So you need natural gas to be that bridge fuel, and the only way to get to zero carbon emissions is to use it in the short to middle term.
Right. Talk a little bit about the progress that we have made here so far. I mean, what are some of the companies that are leading this? Or?
Yeah, I mean, the biggest thing you have looked at with renewable energy is the intermittence issue. So you're seeing companies like Solar City that are going and leasing the actual panels to houses. So you're moving a lot of the transportation portion away from it. So you're slowly moving away from the intermittency. So you're seeing companies like that. You're also seeing SunPower, also in the solar leasing business, that does a very good job. So you're seeing companies gain technology. Battery technology has made a lot of strides. However, we still have a long ways to go. Tesla recently is going to spend about $5 billion to work on a lot of their battery technology that they can slowly use into the solar side. So you're seeing a lot of strides. However, we're still a long ways away from being a zero carbon emission nation.
Right. All right, let's head over to Japan, where after 3 years since the Fukushima disaster, Japan has issued their first draft of a new energy policy. And the bottom line is they're pretty much staying the course, and they would like to get their nuclear reactors back online. Now, ever since Fukushima, it seems like nuclear power has just been totally derailed.
It's been the redheaded
right?
stepchild. Nobody wants to.
Nobody wants it. I mean,
France.
They're
the only
Yeah, the
ones.
only one, surprisingly.
Right. So it shut the book on nuclear energy in other countries. I mean, will it ever recover?
Yeah, right now it looks like it might be, especially in East Asia. China has 19 reactors online with almost 30 under construction right now, with even bigger plans beyond that. President Obama just announced that he's going to allow nuclear fuel to be sold to Vietnam. Now Japan wants to bring back on reactors that meet 2011 standards. So all three of those nations have big plans for nuclear energy. And you talk about Europe, Germany completely shut down all of its nuclear plants. So complete reversal, of course, from a lot of these countries. But with the fact that Japan has been importing liquefied natural gas since then, they really need a cheaper option, and just bringing these plants back online might provide that rather than building all new plants.
So if nuclear power is not dead, what do you see in the future for maybe some uranium miners and some of the people who provide the materials to actually make them run?
They've been certainly struggling. You look at a lot of the uranium stocks have just been really crushed since Fukushima, and reasonably so. Oversupply has been a big part of the marketplace. Russia was decommissioning a lot of their nuclear weapons and using that uranium in nuclear energy production, so they had that supply. Then miners kept producing at the same levels. So you look at a company like Denison or Cameco, which is Canada's largest nuclear fuel provider or a miner of uranium, and those two companies really stand to benefit, and you could possibly see a lot of consolidation in this industry. But if Japan does move forward with this, I fear for a lot of natural gas exporters because they're a big buyer of liquefied natural gas right now because they don't produce any, and it's had to make up the emptiness that nuclear left once they shut those 48 plants down. So it could kind of change the market dynamics that everyone got so excited about for LNG exports.
All right, for our last story, we're going to head over to Bloomberg News, where we learned that after boosting reserves to a record level last year, Exxon is pulling back on capital expenditures. According to a recent SEC filing, they'll be spending $37 billion on average every year for the next few years. This is compared to $42.5 billion in 2013. What did you think of the news?
I thought it was interesting that they finally did it. We were kind of expecting them to pull back a little bit. Where they're really pulling back, what they're looking at, we won't know till next week when they have the presentation, but they're looking at new wells. They're going to cut back a little on their E&P, and they're also looking at offshore that they're going to cut back on. So that's another area that's pretty interesting. But, you know, where are they actually going to cut back? I'm thinking it's going to come from the Arctic. They have a lot of leases up in the Arctic above Russia. And if you look at what Royal Dutch Shell, they spent about $5 billion getting leases above North America, and nothing's really come to fruition. They tried to drill up there for 2 straight years, a lot of troubles. So I'm thinking, you know, right now, with a lot of the production that they're increasing in the United States, they don't really want to go and put a lot more money up in the Arctic when it's still very, very risky. So, you know, I think they've done a great job in the continental United States. They have great plays in the Woodford, Bakken, and the Permian Basin. So they moved a lot of their natural gas wells to liquids, and they've really grown that. So I think that's where they're focusing, and that's why they're saving some money.
So assuming that's true, and you're right, we'll know more in a couple days.
Yep, next week.
Next week, what companies do you think are going to be impacted?
Well, I think if you look at the offshore drillers, after Seadrill's earnings, they were talking about big oil and a lot of capital allocation decisions that they were going to make, but they were kind of holding back. They weren't sure exactly where they were spending. So I think that industry could be affected. I mean, even today, Transocean ordered 2 more ultra-deepwater rigs. So if big oil isn't spending as much there and more rigs come online, you could see that softening maybe expand a little bit. So I would look at those companies. But, you know, overall, I think Exxon is making the right move by cutting back a little bit. And they've kind of guided everybody towards they wanted to move into that high 37 to 39 billion for a little while.
So not a big surprise.
not a huge surprise.
Yeah, prudency is very good for a company of that size. I mean, they can't continue to spend $40 billion and not grow production, so maybe they just need to step back and reevaluate a little bit for a year or two.
Yeah. All right, well, that covers it for the headlines. Now it's time to answer your questions. We've got a couple today to cover. The first one is very simple.
Very simple, straightforward.
What are your thoughts on coal? Is it a good investment? That's what Ryan wants to know. Taylor, do you want to answer Ryan's question?
Yeah, I'll take a quick first stab at it. A lot of things going on in the coal industry right now. Domestically, we're suffering on the producer side because of EPA regulations, and steel making really hasn't been all there, so thermal and metallurgical coal have struggled. So they've turned to exports, but export capacity hasn't been growing at all. So you have to wonder how much growth is going to be there for these kind of companies. There's a lot of talk about new terminals in the Pacific Northwest, but a lot of them have fallen off the table because of regulations have been taking so long to even decide if they're going to be able to be built or not. And then another thing you're looking at is you've got regulations cracking down here. So like I mentioned, exports are important, and global growth slowdown is hurting the steel market. So exports in the metallurgical side are even taking a hit, though you might see a little bit of turnaround. So investors here really need to pay a lot of focus to companies that are strengthening their balance sheets. You look at a Consol and a Chesapeake Energy. Both of those companies are wildly different. Consol is a little bit more diversified, but Chesapeake is producing in the cheapest basin here. So they've got a stronger balance sheet and they have low cost. So those are two companies that I would consider, even though I'm not too confident in the long-term viability of coal.
Yeah, I mean, I agree with you. I mean, you have to look at what is long-term. If you're looking at the United States market, thermal coal I don't think is ever going to rebound to the levels it was. I think that could be a lot of stranded assets. And like you mentioned, Consol Energy, having that diverse approach is really important. One other thing I'd like to say is, if you're looking at this industry overall, you want to look at some of the emerging economies and seeing how much they're actually spending in investment projects. You know, the company or countries like the United States, it's basically grown from consumer spending. So you want to look at countries like China that was spending 50% on investments, which is building the infrastructure for those countries, where the steel is so important for the coal industry. So I would look at emerging markets and see where what type of investing they're doing or spending, and kind of play that for the coke and coal industry.
All right, next question comes to us from P. Anderson. Are there long-term growth aspects for Monsanto?
I definitely think so. This is a company that always makes the news for the wrong reasons, even though most of it's just legacy from Agent Orange back in the 60s, which was terrible, but they're a different company now. And they got well ahead of the game with seed genomics, which, like it or not, is going to play a really big part in producing higher yields from less and less arable land around the world. They got a lead start on DuPont and Syngenta, which are their two main competitors. DuPont, though, is trying to play catch-up. They shed a lot of dead weight with some of their segments that they thought were underperforming, and they're going to pour the majority of their R&D into agriculture. So Monsanto better watch out, but I think the market is big enough for at least 2 to 3 competitors to really thrive, because these companies have really only targeted North America and South America to date. So they still have Africa and Asia to really jump on board and create seeds that are built for those specific environments.
I think you're right on. I mean, if you look at the amount of arid land that's out there, it keeps increasing. I mean, no matter what side you're on in the global warming, we're still having issues with water. I mean, California has a big problem with it. There's just not enough. So you're needing these drought-resistant seeds. And, you know, Monsanto, over the last 5 years or so, they've doubled the revenues in their corn seed business, which I think is going to be a big driver of them. And they're also now getting into technology. The Wall Street Journal recently had an article talking about them using machinery and a lot of tractors, and then collecting a lot of the data from a number of farmers to increase yields. And they think they can grow yields by almost a third. So, you know, I think they could really look at that. They already have a project called the Field Scripts project that they're slowly rolling out in the United States. So if they get that together, they think that 20% of their earnings growth through 2018 could be from that. If the yields are there and the technology is there, that could be a good growing part of their business as well.
All right, well, that covers it for the mailbag. If you have any questions for us, you can send them to energy@fool.com. You can also ask us on Twitter @TMFEnergy. That's going to do it for today. For Taylor and Joel, I'm Allison Southwick, and we'll see you next week.